as expected yesterday, after the central bank kept that rate, that MPR rate unchanged at 8%, we have got the Kenyan shilling, sorry, at 6.25%. We've got the Kenyan shilling under pressure this morning. Any surprises for you there?
Well, yes, but I think we have a bit of a liquidity squeeze at the moment, and I think that the shilling may hold up going forward. But still, we have very high demand coming from especially the energy sector for dollars. And I think with the drought now, we're also seeing a lot of demand for because we need to import heavily on that front. So I think we are still not in a very good position, and I think the shilling will still continue to take a bit of a beating going forward.
So it's a surprise really yesterday that you had the MPC leaving the interest, its main interest rate unchanged, with inflation running at 14.5%. And especially after the decisions that we saw earlier this year, many people are beginning to ask the question, Kenyan monetary policy making credibility here is in question. Is the market questioning this?
Well, I think they're more wondering about what the effect has been and what effect it will have. I think the fact that we haven't seen, okay, we did see the shilling at least stabilize a little bit after they made the decision a few months ago, and or a few weeks ago for that matter. But again, the issue is how much the central bank is ready to actually come out and to try to stabilize the shilling, and how much it can actually get in and be able to affect the shilling's movement.
Yeah.
So I think there are questions to be asked. There is still a bit of an old school way of thinking down at central bank, which maybe with time needs to be addressed. And we hope that this situation can be resolved soon. Otherwise, we are going to continue seeing a lot of issues regarding the shilling's stability.
Yeah, but the question is also whether the central bank's monetary policy making here is being questioned by the markets. How much does the market actually now believe that the central bank has got this inflation issue under control? You have got negative interest, real interest rates of 9%.
Yeah, I think the market is not very confident at the moment, which is why I'm saying that there is a lot to be questioned about how the central bank is handling the whole issue. We hope that very soon the issues will be addressed, and well, I can't really say how they will address it or what can be done to address it. It's just that the shilling continues to take a beating. It's not very good for our economy. It's not very good for business down here. And so the market is really reeling under the pressure.
Absolutely, it is reeling under pressure. And I can tell you, let me just read you some of the comments that we saw coming through yesterday after that decision was made, with Ali Khan Sachu, independent analyst, saying, I am dumbfounded. The MPC is shredding its bona fides as it has done all year. The shilling and the long end of the curve been dealt a body blow. And then we had Ignatius Chicha, head of markets at Citi in Nairobi, saying he had expected a rise of between 25 and 75 basis points. And ideally, a 25 basis points increase would have sent a signal that they are in a tightened monetary policy. That didn't happen. David Cowan, out in Nigeria at Citi in London, said, in this case, it is hard to understand why the central bank does not want to tighten monetary policy to help ease the latter, which is inflation, while the former is true. Then the impact of growth tightening should be limited. So there is broad-based consensus here that the central bank hasn't got it wrong. Is it a case of not having the right man in the job here?
Well, I think it's not having I think it's we probably have the right man on the job. I just think that they are being too conservative or too worried about the effect whatever decisions they make at the moment will have on the whole scenario. But I still believe that at the end of the day, they will have to step up, they will have to come out and make a decision that actually resolves this situation once, at least for the medium to long term, so that we can see some sort of stability on the markets. Otherwise, at the end of the day, it is the local economy, it is the Kenyan who suffers, and this could even lead probably even to social unrest. Yeah, sure. Now, on the other side, we saw the equities market, I suppose, cheerful that the interest rate wasn't changed. So we had the NIC yesterday up 0.3%. So that was positive. Let's just go through some of those top gainers. And of course, one of the star performers yesterday was Kenol Kobil, up 5% after those stellar numbers. Did you like them? Well, Kenol Kobil announced an 86% increase in profits, and they had already given the market a signal that they were expecting a 50% plus increase in profits. So this was actually a pleasant surprise for investors. It was a good thing for them, and I think what we have seen also is that they have shored up their reserves by over 280%. They are also planning to issue a note. So in terms of growth investors and outlook going forward, it is looking like a very good stock. They are still trading at a PE of below 5. So I think Kenol Kobil, having given an inclination that they would keep their dividend payout also at around 40 to 45%, are an attractive counter at the moment. Yeah, on the other side, we had Transcentury yesterday amongst the decliners, and I pick on Transcentury because it listed at 50 shillings per share, traded yesterday at 42.25 per share, 18% down on that initial listing price. Did the market misread the value in this stock? Well, I think Transcentury came onto the market at 38, a PE of around 38. If you compare that to its closest comparison or its closest competitor, which is Centum, which is trading at around 6.5 PE, then I think that they did value the stock with quite a premium. And so now the market probably is valuing it competitively, and usually I have to look at the books a little closer, but I think that they need to give the market the reason to value them at such a PE. I believe that once the results come, their PE ratio will probably come down if they have made good returns for this period, and based on their net asset value, because we haven't seen investment companies valued very much higher than their net asset value on this market. Quickly, Samuel, so where is fair value for you? For Transcentury? I wouldn't go that far. I just believe that the market will tend to value it based on where the valuation of Centum is around. So I believe that I would rather look at the net asset value and then give it a premium maybe of 4 to 5% at the moment, based on how we've seen the market historically value investment companies.